I mean, we've already been extended. Even last time, I think I was on Kitco, I was talking about might be the time to start locking in profits rather than establishing positions. And that's where we're at right now. I mean, the trend line has clearly broken. We've had. We're definitely due for a pullback, and that I think that would be a Bible pullback when we eventually do pull back to the 21 moving average around 371 on the spider. I think that's where we're headed.
Well, Emo, some people might say there's a bit of there's a bit of confusion right now as to where the markets are headed. Maybe there's not as much clarity as some traders would like. So isn't it better just to stay on the sidelines, wait for momentum to really establish before getting back in?
Definitely. I think if you took profits on this rally up and now you're looking to get back in, you're looking for a re-entry point, it's always better to wait. Wait for some clarity, wait for some strength. Because the problem is a lot of people are fully invested in this market that doesn't leave a lot of gunpowder, so to speak, for more buying to come in and to stocks for continuing to rally. I think this is what you're seeing right now is people having generational gains locking in their profits. So I think if you're looking to get back in, definitely wait, but definitely not the time to be buying at the moment, in my opinion.
Okay, so S&P 500 up or down by the end of the year, do you think?
Down.
Down? Okay. Now let's tie what you just said back into your forecast for the S&P 500 down by the end of the year. Why do you think we'll fall down from current levels?
I think for the reasons that we were just talking about is like a lot of people are fully invested. And for things to go back up, there needs to be additional buying coming in. So now that the Fed is also tapering and people usually are either fully invested and they're looking to lock in profits, there's not a lot of additional interest or buying coming in.
Where you're drawing the arrow right now, that looks like or the crosshair rather, that looks like a pretty significant pullback. Some people were talking about, potentially a market crash, another bear market in the order of maybe 20 to 30%. Is that possible, or are you talking about a correction in the order of maybe just single digits, and then we'll see a nice healthy pullback and then a recovery from there? What's your take?
Right. So I think we're definitely, I don't think we're going to crash. So there's a difference between crashes and bear markets that people always confuse. A crash is what happened, let's say, in coronavirus, where you quickly go down and like a bungee cord, you snap back right up. That's a crash, right? A bear market is where you have a lengthy period of downtrending, similar to if you go all the way back in, let's say, 2000. You saw this was 3 years of pullback, 3 years of decline, right? You go back here, this was 3 to 4 years of decline. So that's a bear market, and a crash would be when you get a quick snapback drop. So I think we're definitely not going to get a crash, but we are going to get like a lengthy, I think, period of pulling back. I think we're going to enter a bear market. So I do think 20, 30% pullback is not really unreasonable to ask for.
But over an extended period of time, not just in a matter of days, right?
Yeah, over an extended period of time.
Interesting. Okay, so we'll talk about your position.
The fact of the matter is the trend has been broken at the moment. And until we get back above today's high again on spiders, we're going to enter a bear market. So to the last 5 years that are well due for a pullback. And so I've been establishing shorts in both sectors, residential and commercial. So one of them is, for example, INVH. It's Invitation Homes. So this is a stock that I shorted a couple days ago, right around at $39, $40. Right now it's down about 38. So it's been going down last few days. I think this one's eventually going to be around $34, which is probably where I'm going to get out of my short. So that's one of them. An example of that, again, a monthly chart, right? Look at the last time it got that extended. Look what happened. Snapback, really big crash. Now, again, same thing, multiple, months in a row, it's been going up. That's where I try to pick a top, and we've got a healthy red bar now forming, which might lead to furthermore red bars that are going to take Invitation Homes down. So that's
right. And you told me offline you're shorting Kathy Wood's fund. Why is that? You don't like tech?
I do like tech. Again, I do think the valuations are, across the board crazy, and she does have a lot of exposure to things like Palantir, Tesla in her portfolio, which are also a lot of extended. But then when you look at it technically, this is kind of what I base my thesis on, is you can see here, ARK has been on a run from $35 to $160, right? You've seen a great run. Now, for the first time, you're breaking below that key support area of 116, right? And first time you're getting below, on a weekly chart, below the moving averages as well. So this chart to me looks like it's ready to have a position short in ARK Holdings. Shorted it yesterday at $117. Today it's down to 112, and I think this is probably
We're bearish on Kathy Wood's ARK ETF, well, one of her ARK funds. It did fantastic over the last year and a half, and had a major correction earlier this year. Now, tell us about your tweets and why you think that it will continue to go down.
I think the biggest thing people miss is that, I'm personally a technical trader, but everything can be put on a chart. So once you look at the chart, when it completely went parabolic, right, just shooting straight up, the same thing can be seen on fundamentals too. If you look at the PEs of those companies and put it on a chart, they were straight up. So when the chart is pulling back, technically, what's also happening is the PEs are getting compressed. And that's going to happen more and more. Because think about this. ARK fund went down 20 something percent while the markets went up 27%. The markets did not even start its pullback when her stocks in the index started pulling back. So when the real pullback actually happens, they're going to go much further, especially like Teladoc and Roku. I mean, there's nothing innovative about that. It's called ARK Innovation Fund. There's nothing innovative about that. I mean, most hospitals these days have their own systems built in that have video conferencing and things of that nature. And if they don't, they're using FaceTime just like everybody else. So like, what is Teladoc? How innovative is it really? And when it comes to Roku, how innovative is that? We got Apple TV, we got inbuilt things on Samsung phones and Samsung TVs. So like, what is really Roku? How innovative really is it? So
Holdings for the top 10 holdings for ARK. Tesla, number one, with the highest weighting at 10%. Then Teladoc, Roku, we talked about that. Coinbase, Unity Software, Zoom, Square, Spotify, Shopify, and Twilio. Now, look, at what point these companies were the industry disruptors? Maybe they've matured a bit. Maybe there's up-and-comers now. But, are you saying that this list of names they've run their course, so to speak? Their heydays are gone. It's time for the new kid on the block. They're no longer the disruptors, the innovators.
Yeah, because you think about it in some of the businesses like Shopify and other businesses, like the biggest thing that could happen for these businesses is for everybody to be shut at home, for them to get the user base that's going. So the best case scenario for them has already happened. People were in lockdown, people were at home. So there's not a lot of growth left, in my opinion, in that regard. Plus, there's always disruptors who disrupt the original disruptors, right? There's always that case. So there's always, when looking at investments, so all the monthly charts technically suggest that there's further downside. So last time
we're speaking today has more or less stabilized today on Tuesday, but that wasn't really the case yesterday and a few days before that. So summarize for us exactly what happened in the last, not just few days, but last couple of weeks to months. As you know, risk assets, including cryptos, have been falling steadily since November.
Yeah, David. So I remember like last time we were talking, we had talked about something known as a PE compression, which I talked about that we're going to be entering that phase known as PE compression where the valuations get crushed. And we were, I think, talking about real estate stocks and tech stocks, how they're going to be hammered in the previous episodes. And all of that for me was all based on technicals. Now you could put a variety of reasons, which are inflation, rising interest rates, but for me, it was all technical. So as you can see the chart in front of you, this is the chart of the S&P 500. This is a weekly chart. So as a technical trader, all we're literally doing is this is an uptrend. You can see that it's above all the moving averages. It's riding the uptrend. Once this uptrend was broken, I think that's when we were on Kitco News last time, where we talked about that the trend is changing. There's a warning sign. So be careful. And right over here, when the market sold off, recovered extremely hard, people were back to bullish again. And technically, we call that a retest and failure, where you break a level, you try to retest it, sellers come back again, and you get a move down. So to me, honestly, I don't even think the market's done. Like the markets are down a good amount, but I think they have a long way to go still.
What makes you say that exactly? Why do we still have a long way to go?
So technically, I'll show you a few charts. This is known as market cycles or market stages. Stage 1, stage 2, stage 3, and stage 4. So I'll show you some examples of that using a monthly time frame. And you can clearly see, if I could just go ahead and delete my lines over here, you can clearly see Zoom, a sideways pattern is what we call stage 1. And then when it enters an uptrend, we call that stage 2. Usually in a stage 2, you get extremely high volume and you get a reversal candle, which happened on Zoom. And then you get a stage 4 decline. So everything, no matter if it's cryptos, stocks, markets, they all follow this market cycles. So I'll show you just a few more charts really quickly. So just notice this angle, how it went up, V-shaped reversal back down. Let me show you another one. Kathy Wood ARK, look at this. Stage 1, stage 2, stage 3, and then a stage 4 decline. Here's a few more. Roku, stage 1, stage 2, stage 3, stage 4. Even Bitcoin, right? Even Bitcoin, stage 1, stage 2, stage 3, and then back to a stage 4. So everything technically moves in the same direction. So you have to really pay attention to technicals. Fundamentals are great, but in a market environment where there's high volatility, you got to be in the right side of the market, and technicals enable you to do that. Teladoc is another great example of that. Recently got crushed on earnings, stage 1, stage 2, reversal candle, back to stage 4. So just following these basic technicals, people could be on the right side. However, I will say some of these stocks like Teladoc, even Cathie Wood Ark, now are at the bottom of their stage 4s, which get into the territory where they potentially become viable again.
Okay. I want to go back to the S&P 500, please, and just look at the broader market. So you were telling us about indicators. At what point, Anmol, at what point do the charts tell you or indicate to you that a downturn is about to happen? Could these moving averages, be a predicting indicator for a potential inflection? As you can see, the markets have steadily risen until its peak last November, and then we've seen a sharp drop ever since. So I'm just wondering whether or not this has more or less been telepathed by the graphs.
Yeah, I think that the early warning sign for any investor is drawing a trend line. So you can see my blue line over here, how we were hugging that trend line. Every time we came down to it, we bounced. Every time we came down to that line, we bounced. Here we did not. So that was the first sign as an investor. It's not a sign to get out. It's just a sign, hey, something is changing. Let's keep an eye on this. And when you finally come down and you retest and you fail to make a new high, that's your sign that now it's in a downtrend. So now you get lower highs and lower lows, lower high, lower low. You're going to get another big bounce, because in bear markets, the biggest bounces tend to happen in bear markets. And those bounces make it feel like the downtrend is over. And then you get a move up, lower high, and another lower low. So that's the trend that the market follows. And to me, this market, I think S&P, if I was to make a bold call, probably goes to 336, 340 on the SPY.
340, 360. Okay, so what exactly is that in terms of percentages from our current level?
From a current level, I would say probably another 10 to 15% we still have to go down on the SP5. And if talking about the NASDAQ, maybe another 10, 15%.
Okay, and what's going to happen after that?
I think what we have to wait for, if you're looking at as an investor and you're looking to buy the dip, you have to wait for some sort of a capitulation where the weak hands get shaken out. You get a big down move. One of those scary days where everybody's scared, you get a big move down. Those are the days where you have to look for a reversal, or known as a capitulation. Usually that will be accompanied by high volume. As you can see here, we extremely went down, high volume came in, we bounced right back up. Extreme move down, again, volume picked up, as you can see on this candle, we went back up again. Right now, I'm actually not seeing the volume pick up, which makes me think we are not near a bottom just yet.
All right. Suppose we are on our way.
So these rallies are getting sold. I don't think any news can really fix this issue at this point. I think we do have to get the price correction. Price correction has to happen. There's only two ways it can happen: price correction or correction through time, where we stabilize and go sideways. Those are the only two ways prices can correct, and a correction has to happen before we can continue to go back up again.
That's interesting. If you're so convicted that the price has to fall more before we see a correction or rebound rather, and there's nothing really that the news can do to change your mind, what are you doing right now to prepare for this drop? Are you shorting the markets? Are you staying on the sidelines? What's your play here?
So, yeah, good question. So in this market, I've actually chosen this decline more as an opportunity to lighten up and not be involved in the market. So back in January, at least in my newsletters, I sent out an alert. I said, not really comfortable holding anything, might be too early, but I'm choosing to be safe. So I exited all of my long-term investments, early this January. And I think there was a tweet on Twitter I made as well, which I think you retweeted, which was about getting out of the markets and how people these days have been spoiled over the years to buy every little dip and have it work until the real dip keeps dipping. Yeah. I think a lot of smart people are going to get caught off guard. And you can see that right now with a lot of funds like Gerber Kawasaki and Cathie Wood Ark, like trading at historic lows with still more potential room to go down. I'm actually getting into Netflix. I started buying it. Netflix on earnings went down, right? From all-time high of like 700s down to 174. And talking about the market stages that we talked about earlier, same thing. Stage 1, stage 2, you get a stage 3 decline, and then boom, stage 4. So now I think, in my opinion, Netflix will find a bottom somewhere around the 140 to 150 area. So I'm going to be dollar cost averaging myself into Netflix from here until the $140, $130 area, because I think from there, you're going to get a pretty sharp, substantial bounce.
Okay. Is there any company news that's like we can continue seeing a correction in the Nasdaq, which you predicted? Tesla, do you have any views just from a technical perspective?
Yeah, from a technical perspective, I've kind of maintained 140, 150 is where it's headed. And again, if you take a look at technically, it's a classic technical pattern. We break the trend line, we get a little, head and shoulders, which is a very classic pattern. And it broke that just today. So I think this stock is probably going to be worth $140, $150. But that'll be an area where I would be comfortable buying. I don't own any Tesla right now, but I think Tesla 140, 150, and I'd be look sideline, always have cash on the side in case of a black swan event. And that could be anything.
Can you just zoom out a bit?
So I think there will be, because one thing I have noticed is things don't really bottom out until there's extreme fear. And even though the markets are down 35%, even though cryptos are down 60%, I don't think there's fear is being felt on Wall Street or anywhere else, right? People aren't feeling that pinch. So I think there's going to be one potential move down, something like what happened here in 2018, where we were in that sideways pattern, a little breakdown, right? That takes out support. You get a massive volume spike that sets the low, and then we take off. So by that measure, it's possible that we're going to get this one sideways break to the downside, which will make people think that, support levels are breaking. Maybe it's time to get out of Bitcoin. And then that's going to probably set the bottom and result in an uptrend. So I think there's going to be that one new low. What might cause that? I don't know. But I think there's going to be that one little shakeout and a volume spike, just like what happened in 2018.
What's the low that could make sense to you?
I'm thinking about 13,000 is kind of the level. Like if it gets there, I'd definitely be looking to, buy some Bitcoin. So 13,000, I think, is where it's eventually headed. Although